Welcome to everyone here in the room to Fasken's 16th Annual Global Mining Group Seminar Series, and also welcome to those of you online. I think we had about 90 people that registered online for this session today. My name is Michael Bourassa. I'm with the Global Mining Group here in the Toronto office. Today's webinar, South Africa, Stronger Together, Progress Through Partnerships. This is the 9th in our series of 12 seminars this year. For those of you watching online, there's a link to our seminar series beside the video window. And those in the room, we will have information at the registration desk. As you see from the info slide on the screen, I'd like to provide a land acknowledgement. At Fasken, we have embarked on a journey of reconciliation guided by our Reconciliation Action Plan. As part of this journey, we believe it is important to acknowledge the land and the people who have called this land home since time immemorial. Today in Toronto, we are gathered on territory that has been the home of many nations, including the Wendat, the Anishinaabe Nation, the Haudenosaunee Confederacy, the Chippewa, and the Mississauga and of the Credit First Nations. Toronto is also covered by Treaty 13, signed with the Mississaugas of the Credit and the Chippewa. We appreciate living and working here and recognize the importance of working to advance reconciliation between Indigenous and non-Indigenous people here and across Canada. I'd like to introduce Consul-General Thandile Babalwa Sunduza, South African Consulate-General. Consul-General Sunduza was born in Soweto and became a political activist at a young age, shaped by her experiences growing up under apartheid. She held leadership roles in major South African youth and student movements, including the African National Congress Youth League, the South African Students' Congress, and several Christian and civic organizations. Her professional career spans roles in sports administration, provincial government, and national government, culminating in her election as South Africa's youngest member of Parliament, where she chaired the Portfolio Committee on Arts and Culture. She has served on numerous national boards and represented South Africa on international platforms. In 2019, she was appointed Consul General to the United States in Los Angeles, and in 2025 became Consul General to Canada, based in Toronto. A philanthropist and cultural activist, she speaks 8 languages and received multiple leadership and humanitarian awards, and is passionate about sports, fitness, and community development. I would like to turn it over to Consul General now to introduce our next speaker.
Good afternoon, everybody, and thank you so much for being in this place, and thank you for giving me the ear to listen to me. To you, distinguished guests, investors, leaders in the industry, representatives of Fasken, to everybody in the mining sector, ladies and gentlemen, I would like to say Nyabonga, which means thank you in South Africa, in isiZulu. It's an honor to be here, but I would like to firstly thank Fasken. Thank you, Michael. Thank you, Andrea, so much for the event that you have invited us in and partnered with us. And you've been partnering with us for years, and we really appreciate that because you've been consistent and very reliable. As we understand now that South Africa and Canada share a lot when it comes to mining, and we are here to learn from each other and become strategic partners, and to know that South Africa, I always say it's the #1 investment destination in Africa. This is how I market my country, and also say that this is where you start before you go up. I know my African brothers and sisters are here, so I know they won't kill me, but I'm very happy. We've got a big landscape of mining, and we also have the legal expertise as well, and that we can share, and we are as countries, you know, this is a sector that we in South Africa, we're very, very confident that we have clarity on, because South Africa has been in mining for a long time. As we know that the first diamond was found in South Africa in the 1800s in a place called Kimberley. So Canada is known for its big mining investments. So we are very happy to be part of your partners. And thank you for your commitment as well, and want you to explore further in this in this industry. And I would be very happy after this if you can also engage in our delegation, because I'm not alone, Mr. Chairperson. With the consulate, I'm having Miss Shelly Makaya. Shelly, can you kindly stand up? I want to recognize her because she was the one who started this process. She's been very, very passionate about it, so we'll engage her further. And I'd also like to engage Mr. Judika Cladi. Cladi, can you kindly stand up? He is representing our High Commission in Ottawa, so we are partners. So DM, I'm not taking over, but I would like to also all the delegation from South Africa just to stand up so that Botlhale, all of you can kindly stand up so that they can see you. I won't read you all out here. Yeah, all of them are part of our so I would like you to engage them because there are many things that we need to share a lot. I think we are here in Toronto. It's our home for the stock exchange, which is leading in finance and mining. So we'd be very appreciative for opportunities for engaging us on also investment as well, because South Africa is just looking for partnerships. As we know that I'm not a miner, but I know the biggest thing that everybody is looking to, Mr. Bourassa, is exploration, because everybody wants the safest explorations. Everybody, when they meet me, they say, what are they? GM will speak about that. I think that is very, very important for us. And also our economy is growing. It has grown by 2% actually latest, because we come from, we are still redressing the past as a country. As you know, that South Africa had a system that was called apartheid. So we are still in the process of closing those gaps as well. And further here also to say that we also have companies that are here as well that are representing South Africa and would like you to engage them, but also the companies of South Africa also to engage Canadians as well. So because there are many opportunities as well, and there's a lot that I've learned in this process, you know. So more of me, I'll speak about collaboration, because mining has been our four economic injector in South Africa. And one of the things that we strive in, we have a lot of women, especially in mining, young people. So don't be surprised when you see younger people and would like you to engage in them. So we are very committed in strengthening our international partnership with you and the advancement of modern and competitive technology. And lastly, I just want to really that to say that Mr. Bourassa, thank you so much. We really appreciate it. Fasken, thank you so much for giving us this opportunity. And I know in South Africa as well, we are doing very, very well. I just asked Mr. Bourassa if when he retires, can he kindly come and stay in South Africa and leave Canada, because the sun there is very good. Outside here, I'm very, very traumatized with the weather, but it's still a beautiful place. So all of you, what I can say, South Africa is open for business. You know, and what I always say when I stand, South Africa has got 9 provinces, so please explore all those 9 provinces. That is very, very important for us, because usually I always say to people, South Africa is not only Cape Town. Also, just to say that as I close, to say our environmental standards and governance are very, very clean. As you know, that we've got, we are managed by a few sectors. You know, that's why in South Africa we say we account for everything, because we do have a very a security system, you know, that has accountability, because people always say, how do you make it? We've got accountable structures. So whatever you invest, it's not going to the hole, because we've got those systems that are there for your finances. There's accountability. That's why we also even have the police and everybody's, the special investigation units and everything, because I've been asked this question a lot of times. So also what will make you also comfortable is also the partnerships with us. I know DM will speak about Black economic empowerment, because people always ask us, am I part of this? Yes, we are part of this. We just don't worry about our policies. We're also redressing the history. So before I go so far, I would like to introduce the Deputy Minister. We are honored today in Toronto to have the Deputy Minister of Mining, what is it now? Mining, Minerals and Energy over to us. So I'll just give you a short profile about her before I call her Our Deputy Minister of Mineral and Petroleum Resources is Ms. Phumzile Mgcina. She was appointed as the Deputy President by the President as Deputy Minister in 2024. Before she came to this department, she was the Minister of Employment and Labor. So she understands the sector as well. She brings extensive public sector experience in infrastructure, transformation, policy development, and political leadership, including her tenure as the youngest council speaker of the Amajuba District Municipality, which is in the province of KwaZulu-Natal. Ms. Mgcina currently serves as a deputy, I correct that. She used to serve as the Deputy President of the ANC Youth League and acting as a regional chairperson of the African National Congress. Her background spans both administrative and political roles, supported by studies in public administration and public management, and she is currently studying economics. Deputy Minister, I would like you to come over, and thank you so much.
Thank you very much, Consul-General. Good afternoon, our Program Director, Mr. Michael Bourassa, leadership of Fasken, representatives of Canadian and South African business communities, distinguished guests, our team from South Africa. We've got our entities. We also have our state-owned entities, Council for Geoscience, they are here, the department led by the DG. Ladies and gentlemen, it is a privilege to join today at this important South Africa-Canada investment seminar. I wish to begin by thanking Mr. Michael Bourassa and the Fasken team for their continued partnership with South Africa and for creating platforms that strengthening our investment dialogue between our two countries. We meet at a time when South Africa macroeconomic environment is showing encouraging signs of improvement. The budget speech delivered on the 25th of February 2026 reaffirmed government's commitments to fiscal consolidation, infrastructure reform, and structural transformation. Importantly, the reforms initiated over the past several years are beginning to show the tangible impact. Structural reforms in electricity generation, logistics, and network industries are stabilizing supply constraints and improving investor confidence. The strengthening of the rand reflects renewed confidence in the economy and provides added certainty for global investors and trading partners. For Canada and other importing partners, this stability enhances predictability in the supply of South Africa's minerals and strengthens trade fundamentals. This improving macroeconomics context matters deeply for the mining investment. Mining is a long cycle industry. Investors requires predictability, policy certainty, and macro stability. South Africa is committed to providing exactly that. However, strengthening our investment partnership with Canada cannot remain at government-to-government level alone, but it must deepen at private sector level. It must translate into a joint ventures, capital flows, technology transfer, geological collaboration, and skills exchange. Canada remains one of the world's leading mining jurisdictions, particularly in exploration, finance, and capital market depth. South Africa, in turn, offers extraordinary geological endowment, establishment, infrastructure corridors, deep mining expertise, and access to African markets. The opportunities lies in combining Canadian capital and exploration experience with South Africa's minerals potential and regional positioning. We are already seeing this collaboration in action. The opening of Ivanhoe's new blood reef, palladium, rhodium, platinum, nickel, copper gold mine in Limpopo is a clear demonstration that South Africans remain a global competitive mining destination, such as investment reaffirmation, confidence in our regulatory framework, and long-term minerals potentials. Building on this momentum, South Africa has adopted and is implementing a comprehensive critical minerals strategy. This strategy recognizes that the global energy transition and digital economy are increasing demand for battery metals, platinum, group metals, rare earth, and other strategic minerals. Our approach is not only to supply these minerals responsibly, but to deepen value addition and industrialization closer to source. The central pillar of our strategy is accelerating mineral exploration. Exploration is the lifeblood of mining. Without new discoveries, there can be no new mines. For this reason, we established the Junior Mining Exploration Fund as a catalytic intervention to increase exploration entities in South Africa. Phase 1 of the fund has demonstrated a proof of concept by supporting early-stage projects and unlocking new geological understanding. We are now progressing towards Phase 2 of the Junior Mining Exploration Fund, which will evolve in a blended public-private partnership vehicle. The objective is to mobilize greater private sector capital into exploration by combining catalytic government funding with institutions' investment. This model is designed to improve risk-adjusted returns while expanding participation in the sector. For Canadian investors, this presents a significant opportunity. Canada's expertise in exploration financing, venture-style investment, and mining entrepreneurship aligns naturally with South Africa's geological potential. There is a strong scope for Canadian participation in this next phase of our exploration drive. Our regulatory reforms further supports this ambition. We are working to modernize and digitalize our licensing system, improve turnaround times, and enhance transparency. We are equally strengthening our access to geological data through the Council for Geoscience, ensuring that investors can make informed decisions based on high-quality, pre-competitive information. Ladies and gentlemen, South Africa does not view mining solely as an extractive activity. We view it as a platform for industrial development, job creation, technological advancement, and regional integration. As the member of G20 and a leading mining jurisdiction on the African continent, we are committed to ensure that minerals endowment translates into an inclusive growth and shared prosperity. The theme that guided our engagement at the recent Mining Indaba, that progress is achieved through partnership, remains highly relevant today. Canada and South Africa shares common values, strong institutional framework, and a long history of cooperation. The next phase of our relationship must be characterized by co-investment, co-development, and co-innovation. Let us use this seminar not merely as a dialogue, but as a launchpad for concrete transactions and inauguration of partnership. I thank Fasken once again for its continued commitment to strengthen this bilateral investment corridor, and I look forward to deepen collaborations between our two countries. Thank you very much.
Thank you very much, Deputy Minister. That was a very, very informative presentation. Thank you. We are going to have two different presentations now by two different people. The Director of Investment Promotion, I'll introduce him in a second, and also the CEO of so pardon me for this. Yeah, Canada Fluorspar. Very apologize for that. I'll make introductions. So I also want to say that if people have questions, we're just going to keep moving with the presentations. There will be a panel discussion at the end. Niel Jacobs is going to lead that panel discussion, and I'll introduce everybody that'll be on that panel. They'll be sitting here on the sofa here next to me. But again, we'll save all the questions. You may have questions for the Deputy Minister or for the Consul-General, but let's save all that for the end. So with that, I'm going to introduce Buthelezi Seageng, who's the Director of Investment Promotion for South Africa's Department of Mineral and Petroleum Resources, leading national efforts to attract investment into the mining and petroleum sectors. He played a key role in establishing the Junior Mining Exploration Fund and works across government, industry, and global, and global partners to strengthen project pipelines and improve investment readiness. With a background in management consulting and a master's in economics, he focuses on partnerships that drive inclusive and sustainable mineral development while representing South Africa on high-level platforms for exploration and critical minerals. So please welcome Buthelezi Seageng.
Thanks, Michael. It's always awkward hearing your profile being read out like that. So I think firstly, thanks to Fasken for having us once again at the session. We've been partnering with Fasken for a number of years, and it's been a very productive or a fruitful relationship that we've had. I think for us this year, it's been especially exciting to come to Canada. We have a stronger rand, which means that we're able to buy more wine when we're this side. So I'll get into the presentation. So as our Deputy Minister said, our Finance Minister delivered the budget speech last week, and we're really starting to see the economy turn. I think there's a number of indicators that suggest that we are beginning to turn the corner, and we've been able to arrest the decline. And where we are right now, I think we're positioned to grow as an economy. We'll then look at the mining sector in South Africa. Like we said, we've been mining for many years in South Africa. We aren't new to the mining space. In our view, we're an emerging market with a developed mining sector. Traditionally known for your PGMs, your gold, your chrome, but increasingly we're starting to see potential in other minerals, copper, lithium, and I think we're building a story around those minerals as well. We've also launched our critical minerals and metal strategy. We'll get into some of the elements around that strategy as well as the pillars underpinning that critical minerals strategy. And lastly, I think my parting words will be why invest in South Africa. So I've chosen two graphs to show there. On your left hand side is real GDP growth. On your right hand side is your is inflation over the last decades. But starting off with real GDP growth on your left, you'll see in 2019 is a sharp dip. That was because of COVID-19, and I think all economies generally follow the same trajectory. As countries closed up during lockdown, there was a disruption in supply chains, travel, etc. So like all other economies, there was a dip. There was a sharp increase after that, but that's just really COVID bounce back. And then you'll then see in 2022, again, limited growth, and that's sort of some of the structural constraints within the economy. But I think what's really interesting is when you start looking at 2024, 2025, you start to see a moderate improvement in the economy. And this is really underpinned by structural reforms that have been happening in the energy, logistics, and as well as tailwinds from the commodity cycle. We believe this commodity cycle is quite similar to the 2000s, but with stronger tailwinds. So as in the 2000s, you had China industrial really driving demand for commodities. In this instance, it's multifaceted. You have AI, you have EVs, you have NATO increase in defense spending to 5% of GDP. And really, we're starting to see governments playing both investor into the mining sector, but also, I think, trying to reshore from China. We're seeing stockpiling of these minerals. So massive tailwinds towards this commodity cycle. And I think we're at the beginning of this super cycle, and we foresee it going on for the long term. Again, in the country as well as South Africa, We also been removed from the grey list. So from a compliance risk perspective, that's also been quite positive for the economy to be able to be removed from that grey list. So really, I think where we are right now from a growth perspective is that we are positioned to start seeing what's happening on the reform side translating into growth going forward. Now, if you look at inflation, I think a story which wasn't told quite well recently is that we've moved away from the bracket inflation targeting of 3 to 6% towards a 3% target with an allowance of 1%. So that's a very important shift in terms of our inflation targeting. And that's supporting both the financial markets. If you look at long-term bond yields, those will come down. Also seeing a stronger rand, which I then also mentioned as well. So we've now aligned our inflation targeting with what I believe is sort of your more international sort of benchmarks, and that's going to be a very big story, I think, going forward for the country, and I think what's going to then translate into is more investments into the economy. That's a quick snapshot of the mining sector. I think here the key takeaway for us is that we've stopped hearing the sentiment that mining is a sunset industry. I think sort of given these very strong tailwinds, given our geological potential as a country, mining is definitely a sunrise industry. And as South Africa, we are well positioned to benefit from this sort of this renewed interest in mining, underpinned by those factors that I mentioned earlier. We launched a critical mineral strategy last year that was followed by a critical minerals implementation plan. And I think key thing, and I know this word critical minerals is used quite broadly. We've seen that different countries have defined what that means, very, very differently. And it really speaks to the national needs of that particular country. As South Africa, we've adopted the definition that says that critical minerals for us, as South Africa, not for everyone, is minerals that are essential for the overall economic development, job creation, industrial advancement, and contribution to national security. So that's our definition of critical minerals. We've then categorized our minerals into 3 categories: high criticality minerals, moderate, high criticals, and then there's moderate to high, and then there's moderate criticality, and there's a list accompanying those sort of sectors or those sort of minerals. We then developed an implementation plan. What we've done is we've pursued a whole of government approach, and I think that's quite important because in order for us to realize the potential of these minerals, we do need all facets of government working together. So it can't be just the DMPR improving policy and regulation. You need other actors as well in government to also contribute to this environment, whether it's energy and logistics, whether it's fiscal incentives, sort of having the discussion around how do we provide incentives for beneficiation or for exploration, then becomes quite important. So I normally have 10 minutes, so I'm not going to deep dive into every single sort of intervention, but I'll highlight those that speak to exploration, sort of given the context of PDAC. And from a geological mapping perspective, there's been significant improvement in our geological mapping program at a scale of 1 to 50, where we currently sit at 20% of the country being mapped at a scale of 1 to 50. And that's quite important because it provides pure competitive data to allow junior miners to then enter the space. Secondly was the establishment of the Junior Mining Exploration Fund. In its current context, it's completely government funded. Since it was launched at Mining Endeavour in 2024, all those ticks are what we've been able to do over the last sort of 2 years. We've had our first funding window where we prioritized copper, lithium, rare earths, graphite. And I think what has been very interesting for us is the number of applications which we received versus the amount of capital available. And with that limited funding, we believe that had we had more funding available, we'd be able to fund more projects. So it wasn't a question of not having good projects to fund. I think it's a capital limitation perspective. And if we're able to grow this fund, I think we might be discovering the future Anglos, the future PHPs within South Africa. And that really excites us as a country. Looking forward, our plan is to convert this from a purely public fund into a public-private fund, where government will play some role in sort of de-risking these projects. And I think that phase 2 of the fund is really going to be very exciting. Again, I think as the DM mentioned earlier in her address, there's been increased focus around improving logistics, both on the rail and port side. There's 3 corridors which have been prioritized, and this seeks to unlock coal, chrome, manganese, and magnetite lines. And that's been driven from a Transnet perspective. So again, I think there's massive work happening. I'm just highlighting sort of three projects within the implementation plan. But there's several projects that are currently happening, and it just speaks to how we're coordinating as government to ensure that we deliver on this critical mineral strategy. So I won't go into all of these sort of six buckets, but I think there's strong reasons to invest in South Africa. Again, we're not new to the mining space. I think we've established ourselves over many years. We actually export a lot of our skills globally. I always say you come to PDAC and every second person you meet is a South African. So you tend to feel at home when you're here, and it's the same when you go to Saudi, when you go to Australia. So I think we have deep skills within the country, and they're still there. We have a long history of mining, but also we have the geology. I think it's unmistakable that we have good geology in SA. We are rolling out our cadastral system, and I think that will also unlock investment into the country. And that's my 2 cents for today. Thanks.
Thank you, Buthelezi. Very, very enlightening. Just so everybody knows, the slides that are here today, presentations are available for any of you online or anybody in the room. Next, I'm going to introduce Dr. Willem Jacobs. He's a globally accomplished mining executive known for acquiring, developing, and operating mining assets in challenging jurisdictions, as well as leading major operational turnarounds. He is the CEO of Renova Capital and chairman of Canada Fluorspar, following senior leadership roles at Randgold Resources and Barrick Gold. Dr. Jacobs also serves as an extraordinary professor at the University of Pretoria, contributing research and supervision in mining law, developing economics, and global extractive industry governance. Willem, welcome to the podium.
Madam Consul-General, Madam Deputy Minister, Michael, thank you for the honor of speaking today. My fellow South Africans over there, strange that we have to travel 8,000 kilometers to talk to one another. Renova Capital is, just for everybody, just orientation. Renova Capital is an investment holding firm, and this investment holding firm is specifically aimed at developing critical mineral assets. Now, it's very important to make a distinction here. Many people give money to develop it. Many people give technology. Very, very few people actually develop assets. If you look at even the Canadian market space, American market space, there are many companies listed on the Toronto Stock Exchange, and they will never build a mine. They will talk about a mine, but they will never build a mine. Renova Capital holds 100% of Canada Fluorspar, which is very important. I see the previous speaker refer to Fluorspar in the South African context as a critical mineral with a low impact. It's true. The United States, on the other hand, and very big parts of Western Europe has classified Fluorspar as a critical mineral with a high impact, and depending on where you sit on the technology scale. Renova's goal is therefore to invest in critical mineral projects which has world-class geology, very important. All of us that's in mining will understand that everything starts with world-class geology. If you don't have world-class geology, ultimately it's the only insurance policy that you have is world-class geology. Lower than medium cost that can be achieved from it. Cost benefit through superior logistics. Everybody in mining underestimate the cost of logistics. Canada Fluorspar, for instance, because it's got its own port, on a landed cost basis, is better off than any competitor in the world by about $55 to $60 a ton, because it's got its own port. And that presentation of the mineral can be enhanced through downstream processing. Shelding is very simple at the beginning. We've attracted very important shelders. One being Traxxas batteries, and they trade about 40% of all Fluorspar outside China worldwide. And Vinmar Group, which is a very big player in copper and cobalt in the DRC, and that's been an old ally of mine in the DRC. There is a new reality for mining and minerals, and I think people must not underestimate this. Whether we like it or not, critical minerals have been defined. Global mineral supply of critical minerals is increasingly polarized into a Western hemisphere and an Eastern hemisphere. Whether you like it or not, that's the reality. If you do not take note of this reality, you will get unstuck in the next decade. Governments are increasingly intervening on the supply of minerals. We see the United States that has put together about $580 billion to invest in critical minerals, in the holding of critical minerals, which is a major turn up. The last 3-4 months we saw 4 transactions in Africa where the United States government put together about $1.5 billion in critical transactions in the DRC, Rwanda. So governments are starting to play, for the first time since World War II, is starting to play a role in mining and the holding of critical minerals. There's the investment implication, which I hope investors and miners don't overlook. All these mad prices that we see at the moment for gold and for all the critical lithium, for instance, you will see that every asset that comes on the market to be sold, all of a sudden the long-term consensus price for gold is $4,500. There's no way under the sun that $4,500 will hold forever. My point here is that for feasibility studies, you have to keep your level head here. The markets are starting to run away. People are buying assets at very stupid prices. We've seen it over the last 50 years, probably 5 times, where there's a complete meltdown after this wave of misplaced optimism is passed. So please, this my appeal to the world of minerals and the world of finances: keep a level head. To participate in this and to make a sale is, in the long term, is going to damage the standing of the mineral. The investment discipline must remain. What is the investment discipline? Prioritize always quality of geology over quantity. Always do that. Use conservative reserve and cost assumptions. And capture higher prices in margins and not justifying a project on higher prices. So if it does happen, capture it in a margin, but don't justify a poor project on a high commodity price. If we look at CFI, and it's as a South African, after I finished with Barrick, this asset I've known for the past 25, 30 years. It's a world-class Fluorspar asset, and that's where it is. And we bought it, Renova Capital bought it in Newfoundland. The strong point, world-class geology, again, just to the investment disciplines, world-class geology and logistics. It's got its own port, so it can trade with the world at a lower than anybody else delivered price. This is the development scale, which is just for interest. We are starting commercial production in about 4 weeks' time, 5 weeks' time. So we are through the white water, and we hopefully will harvest the margins now. Just on the division of the world into East and West, I personally believe that if you just look at Africa, and I'm an African, you will see that the continent is now divided into mining corridors, and it's all around logistics. When we built Kibali in the DRC, we opened that logistical route from Mombasa to the northeastern part of the DRC. There was no road there. Today it's an established logistical route. People now find mines there because they use the road. So if you look at Africa, look what vast areas has been opened over the last 20 years in Africa. DRC was completely inaccessible 25 years ago. Only Lubumbashi was accessible, and a little bit Kolwezi. Zambia was always accessible, but Angola was closed. Look at the logistic line now. That railway line is completed. All of a sudden, all the deposits in manganese in the southern part of the DRC is now feasible. There's logistics. So when you look at anything in the world in minerals, it's about the cost of logistics, and do not underestimate that. So when you look at South Africa, as far as I'm concerned, and as far as Renova is concerned, why we are interested in South Africa is that, as the previous speakers pointed out, it hosts major mining corridors. It hosts globally significant geological events, namely the Bushveld complex, to be specific. It's abundant in critical minerals and home to some of the most prolific fluorspar deposits. There's more fluorspar there and in Mexico than any other places in the world that we know. This legal and regulatory framework has stabilized with democratic maturity. I think we've got some road to go there in terms of attractiveness of investment. We're still pretty modestly positioned in terms of overall investment attractiveness. But I can say today to the audience that Renova is intending to expand in South Africa. Hopefully our next investments will be in South Africa, and the balance of it will be probably in Tanzania. So we fully support your position that it's an attractive mining destination, and we fully support the fact that God has been very, very, very good to South Africa in terms of the mining ownership that we have. Thank you very much.
Thank you very much, Willem. We are now going to have a panel discussion, which Niel Jacobs is going to lead. But if I could ask the panelists to come to the sofa here to my right, and we will provide you with microphones. And I'm going to introduce all of our panelists now, which will include Willem, which I've introduced already. Willem, I don't know, maybe you want to take the chair at the end. Is that possible? So Niel Jacobs is my glasses, is a dual qualified attorney in South Africa and Ontario with extensive international experience in mineral and mining law, currently serving as the General Counsel at Renova Capital and also the Chief Legal Officer at Canada Fluorspar. He previously practiced at leading international law firms in South Africa and Canada, including ours, advising on complex cross-border transactions, project development, and regulatory compliance in the extractive industries. Mr. Jacobs holds multiple degrees from the University of Pretoria, the University of Dundee, and Osgood Law School, bringing deep expertise in corporate and mineral law, international transactions, and strategic negotiations. On our panel, we have Jacob Mbele, is the Director General of the Department of Mineral Resources and Energy, where he leads the department's work to advance South Africa's mineral and energy sectors. He oversees efforts to drive economic growth, promote social equity, and ensure environmental sustainability across the industry. Seema Sarda is the Director, Export Promotion Americas and European Union, for the Department of Trade, Industry, and Competition. Seema is an economic diplomat and trade strategist with more than 20 years experience designing and delivering export promotion and market access interventions that advance South Africa's trade, investment, and industrial objectives. And lastly, on our panel is Siphelele Buthelezi. She's the Executive Director or Manager for Geoscientific Services at the Council for Geoscience, bringing over 19 years of experience across the geosciences, mining, and energy sectors. She leads South Africa's national geological mapping and mineral exploration programs, generating high-quality data that reduces exploration risk and builds investor confidence, following earlier senior roles at Eskom, managing strategic coal portfolios. Passionate about strengthening South Africa's global competitiveness, she champions initiatives that empower junior miners and advance new mineral value chains through credible, decision-ready geoscience. So that's our panel for today. I'm going to invite Niel to come to the podium and start the discussion. And again, we're going to leave some time for questions at the end for not only the panel here, but also for our previous speakers.
Thank you very much, Michael. I can say that as a South African that's been living here for 6 years, you don't get used to the cold. I'm telling you right now, it just stays with you forever. So I think diving right into it, I agree with the statement that was made before. Mining is in South Africa's DNA. We were born out of mining. We've made success in mining. And the real question has always been, what's next? And as a South African myself and involved in mining, there's nothing that I would like to see more than the country having a flourishing mining industry, which will ultimately lead to the country succeeding as a whole. The importance of critical minerals, the extreme need for it on a global basis, as well as South Africa's incredible wealth thereof, I think is positioning South Africa to make that jump into becoming a very, very relevant mining jurisdiction once again. And I guess the first question on this for the panel to discuss is, and I will direct us to Miss Sarda, is what makes the country an attractive competitive investment destination for Canadian companies, particularly in light of mining and critical minerals, and for that sense. As we know, there's a lot of capital that's going around at the moment, and people are looking to deploy it. And why would South Africa have to be or should be considered as one of the jurisdictions?
Well, few markets offer a combination of mining endowments combined with mineral expertise, as well as investment potential as powerfully as South Africa. And I know that sounds a tad bit proud and boastful, but allow me to contextualize why I'm saying what I'm saying. As many of the speakers before me had indicated, South Africa is the most advanced economy on the continent. We have a very sophisticated financial sector. We have the JSE, which is actually the largest on the African continent, with an equity value of around about $1.5 trillion US. Aligned to this, we have world-class infrastructure, and that's been aptly alluded to in the presentations that have been made. But also what has not been mentioned is the fact that we also have a number of special economic zones, and 5 of them have actually been designated just to support the mineral sector in particular. And if I could just briefly mention them, there's the Namakwa SEZ, the OR Tambo SEZ near the airport in South Africa, the major airport, and it's been designated moreover towards beneficiation of precious metals as well as diamonds. We also have the I indicated the Platinum Valley one. But then there's also the Richards Bay IDZ, which is the third largest export terminal for coal in the world. We also have the Fetokomo Tubatse SEZ, which is currently in play, and we are hoping that that one would actually churn out a lot of PGMs and chrome. If that's not compelling enough for investors, what do we also bring to the table is our people. If you look at the current population, 70% of our people are young, energetic, driven, in the age group of 15 to 64 years. And not only that, they're also talented. I think that's an important factor as well that we need to bring into play. And to put the cherry on the top, why South Africa? Because I think it was you that just said it, 80% of MNCs have headquarters in South Africa. We have Ivanhoe, we have the likes of Barrick Gold. There was a company, IMEA, that just listed on the JSE about a week ago or so. These are not just symbolic gestures of goodwill. These are factual, if you would call it, actual attestations to what the country has to offer from an ROI perspective. And finally, why South Africa? Because we are the gateway to Africa, if you really think about it. With the signing of the AfCFTA, we give you Canadian investors an opportunity to explore a market with a market cap of $3.4 trillion US, as well as a population base of more than, 1.5 billion people, which is not something that we should actually just ignore so lightly. So I'll just pause there. Thank you.
That's good. No, we're coming back to that, actually. I want to ask another question before we do. And this is more for Mr. Mbele and Ms. Buthelezi. Taking that into account, if we're sitting here a year from now, how would you, or what would we have to be true to be said that critical minerals have moved into the right direction and development thereof, taking into account what we just heard about what's happening at the moment?
Okay, thank you, Niel. I think taking from the presentation that was done by my colleague, Buthelezi, I think for us, one of the key things that we would like to achieve in the shortest possible space of time is to increase our share of exploration. So meaning is to attract interest in exploration in the country. And that's why we have the critical mineral strategy, but we just don't have the strategy. Together with the strategy, we have an implementation plan. And if you look at the pillars of the implementation plan, Botlhale only gave a little bit of detail about exploration. But there are other elements of that plan, and the one that I want to touch on has to do with policy harmonization. I mean, one of the critical areas where I think we've had a lot of feedback, it's around that particular area, and I think it's an area that has really become a sore point for South Africa when you look at attracting investment. So what we are promising and what we're already working on as part of the implementation of plan of the critical strategy is to harmonize. And what does that mean? Is to make sure that we cut down on the time it takes to permit, and that is right through government, not just for the DMPR to permit, but right through government, and that work is already advanced. And other elements, obviously, that we are pushing, which is another pillar of the strategy, is around ensuring that we put into place incentives that will ensure that we can attract the investment that we want, both in exploration as well as in beneficiation. Right, because one of the things that we've been pushing is that we would like to see beneficiation at source. I think the young population that Seema mentioned, the majority of that grouping is unemployed. And there is an urgent need to create opportunities there. And before I hand back, the one point that I thought I should also just emphasize is our critical mineral strategy lists. If you look at it, it's a long list. We jokingly, but we mean it, always say all minerals are critical, right? And it depends where you are, right? And the ranking that you see in terms of our minerals is because it was mainly driven by the fact that we are looking at economic development in South Africa and the contribution of those minerals. So it does not make, for example, with Fluorspar is on the list because we recognize that it's the mineral that needs to be there. It may be down on the list. It's down on the list because currently it's not necessarily contributing as much to the economy, but we need to grow that, and it's an opportunity we would like to definitely explore. Thank you.
Thank you for the question, Niel. I do think it's a trick question, though, because you are specific on the time frame, and I suspect whatever we say next year, PDAC, you'll be reminding us and asking us how far we've gone. I think what success would look like for us would be new high-resolution data sets to inform the investment in exploration that our DG has just mentioned. Now, we've gone a long way as the Council for Geoscience to make data available. We've got our data portal where you can log on and see the various types of data sets that we have in various areas. We've recently launched the virtual core library where you can look at the various boreholes that we have around the country virtually from anywhere in the world. But what I would want to see and what I would mark as success in a year would be for the consolidation of all of that data, because I don't think you want to be going to that place for geophysics and another place for boreholes. So what we want to do is integrate all of the data that we have and basically present business cases. So if you walk into a room like this one and you say, pick a mineral, I'm able to list business cases with data supporting whatever area you're interested in, whatever commodity you're interested in, consolidated into one area where you can overlay various geological databases and data sets, and you're able to almost come close to what would inform a CPR. So for us, it's using the data that we have collected over the hundreds of years of mining experience that we have, but also looking into recent data that we've collected and ensuring that it makes its own business case. I think it's been said enough in this room that we've got the endowment, and ours is then to make it easier for investors and those that are interested to know where to find what quality it is, and what quantities it exists in.
That's actually a question then for the other side of the spectrum. Dr. Jacobs, I would say these developments, these conditions, are these things that contribute to decisions of companies to, really put in real money into the exploration and development of new mining ventures in South Africa?
Maybe just a few comments here. From an economic point of view, the world of mining was divided into a junior market and a senior market. Junior market was supposed to do all the exploration and bring the projects up to a critical mass. And then from an economic point of view, the big companies will then buy it and develop it. However, it did not work out that way. The junior companies did do the exploration, but then all of them tried to build a mine. All of them, or most of them, were undercapitalized, did not extract the minerals in an efficient form, and the big companies lost their laboratory new findings were supposed to be made. It's very important that we understand that, because we now have a sector where there's a lot of poorly planned projects or executed projects on very good geology, badly funded at the beginning, and that's where I think the government has a key role to play. One of the license conditions is, do you have the technical capability to do this project, and are you financially capable of doing it? Now, in my 40-year career, no government has ever done an evaluation on me whether I've got the technical capability or the financial capability. It's glossed over. So it's a difficult decision to make. It's a very technical decision, and it's judgmental in many ways. And at the same time, governments don't want to push investment away, so they tread carefully around that. But let's just take a step backwards. What is the role of a government? Everything under the top 1 millimeter of the land belongs to the people. The government is the appointed party, which responsibility it is to exploit this mineral, to create maximum taxes, maximum employment, and in the process of administering that, attract maximum investment. So there's a balance that you have to strike, that it's not all for the people, but it's also leaving enough on the table for the investor to get a fair return. Now, by not doing the proper decision on whether you've got the technical capability or financial capability, you actually do an injustice to the people, because your role was to exploit this mineral endowment in the most economic way. So for me, that's an important area, not only for the South African government, every government. As I said, nobody's ever tested, and I've built mines all over the world. There's not one government that ever asked me, just present your credentials in terms of financials. You write a few sentences and speak to you, and there off you go. So that's the first point that I want to make. All the points that you make around the endowment and so on is fair, and your points are really as very well put. I think they must send you around the world to present it. But we have a bit of a backlog to cover in South Africa. Whether we like it or not, we built a bad name up in the previous 20 years, for whatever reason. And when you're a junior company and you do exploration and you delineate a deposit, you get to T-junction. That T-junction, remember, it's not only in South Africa. That same people do it in Chile and everywhere. And then they bring it to a big company, and they've got 10 projects in front of them. And then the additional things come in. Okay, the geology looks attractive. What about the rest? And one key thing that is asked is legal stability. In other words, if there's a fight that we pick up, what is the recourse of the investor? What is the recourse? And just what happened in the last decade, just look at Tanzania, look recently at Mali with Barrick, and it didn't end up with nationalization, but the operator got himself into a position which he can never recover off. Even if you are allowed back in the asset to operate, that asset in your portfolio for your share value is discounted to zero. You do not see the value of that asset anymore in your share price. So legal stability in a country is enormously important. The whole question about once empowered, forever empowered, that issue, you cannot imagine how that damaged us internationally. Just that one sentence. It carried, in the mineral world, it carried the same value as apartheid in the political world, because it touches on a very, very sensitive point, and that is what happens to ownership. So, Mr. Chairman, I think I'm a South African. I'm not only a South African, I'm a passionate South African. And I've been an executive of the most successful mining companies in the world for the last 30, 35 years. All I can say to you is we've got everything in South Africa. You've got the people, as you said, we've got the endowment and so on. But we have to embrace capital. We have to embrace, and that doesn't mean capital must rip the country off. As you hear where my sentiments are, there must be an equal distribution of proceeds to the people in terms of taxes and employment, as it is for the investor. However, capital is a very scared thing. The moment there's pressure, it leaves, and it doesn't come back. It leaves the party. It doesn't just go home. It leaves. And then you struggle a really long time to get it back. And I think we must sit down, have a proper strategy, and in our approach be extremely stable on how we embrace capital. So it must be one message on the critical things the whole time. One message, not multiple, not many voices. And if there are many voices, same message. Everybody, the same message. Thank you.
This actually brings us to the G20 Critical Minerals Framework. Now, as everyone knows, this framework was adopted in 2025 at the Johannesburg Summit. And it is described as aiming to promote greater value capture for mineral-rich developing nations, which, I wouldn't necessarily see South Africa as a developing nation, but let's, for the sake of argument, say we are in terms of getting back into the mining world. We can associate with that. The issue is that this framework is voluntary and non-binding. And I guess the real question to the Department of Mineral Resources, what does the G20 Critical Minerals Framework really change in practical terms for operators and prospectors coming into the country? Does it have an impact at all for South Africans or non-South Africans looking at this, wanting to come into the country and, exploit some of this wealth to the benefit of it?
Maybe let me start with the point that you made around the fact that I think all the work that happens under the G20, it's actually voluntary. And the G20 works around rallying around principles. Right, so if you look at the framework, it sets principles around minerals that we should all rally around or strive to work towards. In the main, the framework encourages processing or beneficiation close to source. That's the gist of what the framework puts out there. So for companies or investors that are looking towards South Africa, I think what the strategy provides for is a signal or indication that from a South African point of view, we see the opportunity as being bigger than in South Africa, but being, continent-wide. And we know that, yes, you are not going to get integration through all the countries on the continent. But there is opportunity at regional level to optimize. And if practical example that I can give is that South Africa, because of the history of mining that we've had for many years, I want to argue that we have the expertise when it comes to processing that may not be elsewhere on the continent, and it provides an opportunity either in the form of skills or in the form of infrastructure that we have in South Africa for investors to expand on the opportunity that they're seeing. For example, in other countries, they demand that close to the point of source does not necessarily mean at the mine, right? It provides an opportunity or a starting point where you could pull together the opportunity that you're looking at.
I remember that in the old MPRDA, there was a huge fight over that. Which actually brings me back to Sarda. If this is regarded as a voluntary system, and not only this, but in a whole, as in South Africa, what concrete support mechanisms and incentives does the Department of Trade, Industry and Competition offer to international, especially Canadian investors that's coming into South Africa, ensuring long-term success?
Well, in terms of, and I'm speaking from the Department of Trade, Industry and Competition that I represent, our incentives fall moreover into 4 categories. As our DG had mentioned, local value addition is very key to us. Oftentimes we see extraction and export, but you don't see a lot of incentives and support measures going into beneficiation. So that's a key area that we're looking at. We're also very cognitive of the fact that investors are looking at fuel efficiency, emissions coming down, and greening. So we're looking moreover at clean production going forward. So again, we have a basket of incentives geared towards that. Additionally, we have in place a number of measures that we have configured with our DFIs towards providing blended finance, as well as risk supporting frameworks for companies wanting to come and invest in South Africa. And then we also have not only the back-end support, but we also have measures in place to help companies themselves to go to market and to explore and put themselves on the global stage. Today is policy in action, DM. We actually have companies here present with us, hoping to engage, meet with distributors, agents, buyers. PDAC provides that platform for them, and we are hoping that through this particular platform, they'll also be accorded that opportunity to engage, to converse, to continue the dialogues as well, to enable them to open those particular doors to get into the Canadian market.
Let's, on the other side of the aisle, if we talk about beneficiation being a key aspect of this framework, Dr. Jacobs, where does the beneficiation make commercial sense, and where does it risk making projects unbankable, especially in a country like South Africa?
Interesting question, because for me, this is the real competitive question, and I would argue that I would be very worried if the G20 makes policy decisions in South Africa. The whole issue about competitiveness, our country must grab. I'm not arguing for Nigeria or Mali or anybody. I'm just arguing for South Africa. So this is one of the key things that today I think politicians miss, even in the United States. To control a raw material economically actually makes almost, there's no importance to it. What is important? The important is what value do you add to the material. What we see today, most countries are mining minerals. They're exporting it to China. They may even half process it, smelt it, make a concentrate, whatever, take it to China, and China makes a product out of it, and they ship it back. So the art lies in what we need to focus on, the conversion of the mineral to get to the final form, which it can be applied to in a final product. So if you want to become competitive as a country, you say, what do I have in my country that differentiate myself from other countries? You use the language, I see Michael Porter language of competitive and comparable competitiveness and so on. But if you go there, you can only compete on price and quality ultimately. So whatever we can do cheaper in South Africa, we used to be 8 cents a kilowatt hour on power. We're not like that anymore. That's why we don't have smelters anymore. Smelters don't make sense anymore in South Africa. But you have to become competitive, or you have to focus on things that you can compete on. naturally can compete on. What you don't want is you don't want to use taxpayers' money to create a sense of competitiveness where that competitive doesn't exist. But you don't get a competitiveness just it falls out of the sky, carried in by the angels at night when you're asleep. You have to work at this. You really have to work with this. People go and look at countries like Germany. Germany's got a few things going for. One is people. And boy, do they work with people. They make the quality steel. They've got zero. We in coal. Coal is the dark mineral of the world. We in coal. And then we're South Africa. We in coal. We burn coal. We do it because we have coal. I don't care what the world says. We have coal. And I can go on and on that. It's not what the G20 say or what that's the mineral that we have. You play the cards which you have in your hand. And just going back to you, Mr. J, what do you compete with? You compete with things that you have. You don't dream and go and look at examples and try to create with taxpayers' money a sense of competitiveness. Compete. And just our approach as a country has to become a lot harder. We think for us, South Africa. I don't think for Mozambique. I don't think for Botswana. I think for nobody. I think for South Africa.
I just have to say, Canada Fluorspar Inc. is an environmental responsible company. It doesn't pollute everything. So, but having heard this, and I think it will be interesting to hear from the entire delegation up here from South Africa, how do you then pursue local value add while keeping projects investor friendly as well? You know, taking into account that you deal with what you have, and you have to have a certain bottom line which you have to achieve without scaring investors away. How do you do that from your end, do you think?
I think then maybe let me first start by, I think maybe there was a misunderstanding on the framework, right? The G20 framework, it's a framework that was developed under the presidency of South Africa, you know, as the presidency of the G20. And basically, if you look at what South Africa is pushing, South Africa is saying, if you look at the region, you look at the continent, we may have strength in different places. And we need to take advantage of those strengths, or you can call them competitive advantages. So it's not basically a policy that's made elsewhere being imposed on the continent. I need to go back to your question, actually.
I can repeat it if you want.
Yeah, please.
So, no, you're right. That's what I understood from the policy as well. It was written in South Africa by the country itself.
Yes.
But yeah, with this in mind, like, how do you pursue local value add while keeping projects investable for international investors?
Okay. I think for me, we need to, when you talk about beneficiation, I think there is, the general understanding is that we are saying, when you say local beneficiation, that people think we're saying mining companies must beneficiate. And I think what I want to argue is that we're not expecting mining companies to beneficiate. We're saying there's an opportunity for industrialists to beneficiate, right? And that on its own should be able to keep mining projects whole. Because the expectation is not for a mining project or a mining company for an Anglo to suddenly get into a downstream, a beneficiation. It's an opportunity for industrialists, and that's why for me, programs like the industrialist program that the DTIC has, it has to focus on empowering those industrialists to make sure that they build factories to take advantage of the value chain. Thank you.
I love the passion from Mr. Jacobs, a true South African. But I think I would have to say that perhaps as a geologist, I would have to care what's happening in Namibia and Botswana and the rest, because geology knows no boundaries. So whatever minerals that we have, whatever mineralization systems would likely continue into other countries in our continent. And what that does, speaking to DG's point, is that we may not necessarily all have to build smelters, or we may not necessarily individually have to find our logistics means. So, I mean, the topic itself is stronger together, progress through partnerships. So I think there is benefit into identifying what we don't need to replicate in a region, and collectively, as that region, countries in that space benefit from that. Furthermore, the G20 framework wants to harmonize the benefit of minerals mined in Africa for Africans. So what that means is that it doesn't help if South Africa is strong in their policies. We are strong in our beneficiation and value add, but right next door, it's easier to get the very same mineral because then it's exploitation, you know. So what we want to do is make sure that we speak in one voice, such that investors know that whatever is required in terms of ESG, in terms of value add, is harmonized throughout the region, and we are therefore all getting the benefit, as opposed to almost competing against each other, and whoever has the lesser requirements ends up getting the investment, and they don't win actually at the end.
Sorry, I tried to put a singular point. You're absolutely right. We do need to know what goes on in neighboring countries to exploit. So you're right there. The issue about that we don't duplicate infrastructure. Can I give you an example which we must look close to our own door? The biggest duplication of infrastructure that I know of in the world is around Rustenburg, between the platinum mines. It's ridiculous. There's probably $20 billion too much infrastructure there. So this debate that we have, we should have had that in the late 60s. And it happened and it happened under our noses. So the issue is, I don't have to go to countries outside the borders to get efficiency. If we are so focused on efficiency, there's lots of places. The chrome smelters in South Africa, the same story. There's a duplication of assets which is unbelievable. What we can do is on that infrastructure, we must remember, we must, on the bulk minerals, we must try to get everything off the road on the rails again, because we will not be able to afford the road replacement program in South Africa. Just won't do it.
There's obviously a lot to unpack, and we actually don't have time for everything today. I would like to invite any questions from the floor at this stage with regard to what's being said. If not, we have some time for a point or two to make up here, but feel free to ask any questions that might be going around right now.
Very interesting, thank you. Can you talk a little bit about Chinese investment on the continent as it pertains to South Africa and more broadly, and what you think about that as it relates to competitive advantage, etc.? Thank you.
I think so. The question is about Chinese investment on the continent. Really, can you speak a bit to that from this South African point of view? Am I translating that correct? Okay, I think Mr. Mbele, that's something that you can address from the DMR's point of view.
I think for me, it talks to the point, again, it goes to the framework, because the framework calls for harmonization so that we don't end up on a race to the bottom, right? Where in South Africa, we look at investment following a certain criteria, but elsewhere, the requirement is not there. I think for me, it's not just the issue of Chinese investment, but I think it's about investment and each country being clear what they want out of that investment. You know, I think if you take, for example, in South Africa, when it comes to mining, there are non-negotiables, things like safety. They are not negotiable, right? But obviously, if the same rules don't apply elsewhere, people may decide to go there. But is it in the interest of all of us? Probably not, right? So I think for me, it's less about, I think it's, it goes back to the point about harmonizing or learning from each other and making sure that we have a set of rules that we can hold in the same way, by the way, that investors, when they walk into a country, I think we use the example of the certainty of law, right? I think the same requirement must apply to investment. Countries must make sure that they have requirements that must be minimum for any investor to follow. Thank you.
On geoscience and data perspective, the Council for Geoscience, we have an MOU with China. And what that has done for us is give an opportunity and a platform for collaborations in terms of technology exchanges and ensuring that we take advantage of the latest technologies in collecting data, interpreting data, and making data available. But perhaps to the question itself, my CEO, Mr. Musamabuza, likes saying, it doesn't matter the color of the cat as long as it catches mice. But to DG's point, if the cat will follow the house rules, whatever its color, and it catches mice, the cat is welcome.
Can I add something? So for me, the role of China in Africa and in South Africa is we must just think a little bit deeper about this. I don't know if you can remember in 2004, DRC just came out of their civil war, and everybody spoke about the geological catastrophe there. God gave everything to the DRC, and everybody spoke about it. There was not one American company turning up. The only American company that turned up did exploration for Tengi Fungurume. They sold that later on to the Chinese. What did the Chinese do? Remember, America did not offer any help. Kabila's dad just got murdered. Just before that, they got rid of the previous president with an American designed coup. And there was zero help. There was no law and order. I was in the DRC in 2002. There was nothing. Nobody had food on the street. All 70 million people was there with all the geology in the world. China came, and they were the only country in the world that was prepared to write a check of $10 billion. They put it down on the table. They entered in a country-to-country agreement, and they said, there's $10 billion, get off your knees and start to operate as a country. Not one Western country turned up. So the Chinese country came in, and they started to mine. Part of the agreement was that they don't pay taxes. It gets tallied up until the $10 billion is repaid, and that's how they got their 10 billion back, but they wrote a check. So you show me any help that any of the developed Western countries gave Africa. Zero. So as much as I'm critical of China's invasion of the continent and the fact that they take the mineral and they add value in another place. As much as I'm critical of that, as much as I must recognize the fact that they do come in and they do something which recent governments do not do. It may be for long-term objectives, political influence and all that, not maybe, it is. But the fact of the matter is, Africa for a long time had no help. It was the World Bank. The World Bank charged interest rates, crippling interest rates, and turned countries into slaves of a capital system which was designed by mainly the United States. And it sounds like I'm hammering on the US. It's not. It's not what I'm doing. The US used the World Bank to create influence. China used investment to create influence. But don't be mistaken. Both are playing the same game.
I think with that we have to end off. I would like the entire panel just to give. Oh, please, another question. Yes.
No, is it on? Yeah. Okay, it was going to be a comment if you allow me.
Comment is more than welcome. Yes.
I loved when that question came because that's a question that I've been answering even in the US. Yeah. That's why earlier on I appealed to investors. Because the problem is that, and I will say it blankly, that's why we appeal even to Canadian investors, because I've been asked this question and I just make the answer simple. I always tell you, see with the Chinese, they don't want to find everything 100% perfect. Infrastructure, everything. They want to work, but with the Americans, what I've seen, and I pray Canadians, they want everything to be smooth first before they come in. And I even made an example when there was in Africa, like now in Sudan, which is not a nice thing, but you find Chinese already there trying to find, but the Americans and others wait for the war to end. And when they come in, the Chinese are already in. But secondly, just to say that the perception, and I'm appealing to investors as well, that the perception about Africa becomes very, very important, because people will start, like I've been in places, the first thing they would ask you, do you have water? Do you have electricity? So that's why we invite you to come over, because some of these questions is because people have got no clue. You know, they've got these fears about investing in Africa, which it becomes a problem. That's where people are losing out. Do you have water? Can people write? You know, those, I would say, primitive ideas. We still find them somewhere. So that's why we're appealing to investors to come, because we are open for market, you know. And if you go even further, I know this is for Africa. We are also, as Africa now, speaking about the Africa Free Trade Continental Agreement, because it broadens our scope as a continent to say that what you think we do not have, we do have, but you also need your expertise. Right now, my last comment before you kill me. I was watching how Canadians also do their mining in snow. It was very, very interesting for me, because now we speak about climate change. South Africa can wake up snowing tomorrow, you know, because we don't have, everybody is still struggling to find out about this climate change. So these are the expertise that we need from your side as well, because also all things are also determined by weather as well. You know, I'm happy that Seema also speak about the special economic zones, and these are some of the homeworks that we want you to come over. We want you to invite you to come over so that you can see all that we are talking about, because sometimes it's not about just looking on the internet. I hope I've represented you well. Thank you so much.
You can look at the internet for Cape Town photos. It's beautiful. Everyone enjoys that. Thank you very much, panel. I'm going to hand over back to Michael Bourassa.
Thanks, everyone, for joining us today. I'm going to make a few announcements about how we're continuing forth. Is this on? First of all, the reception is not going to be here in this room. It's going to follow in the lobby. And with that, I want to thank the South African delegation for supplying the wine. We have South African wine that was specifically provided for our reception right after this. And again, I want to thank the CG and the Deputy Minister and the panel today for an excellent, excellent presentation. Thank you so much for that. And so I just want to talk about our next PDAC webinar is the annual Latin American sessions. We're going to move from your continent over to South America. It's called Ole, more exciting than the World Cup. Join us for Fasken's annual LATAM Mining Roundup. It's taking place tomorrow morning. It'll be at 8 a.m. here. It's also available online. You can sign up for any of our upcoming sessions through the PDAC events button under the video window or by visiting our registration desk. And so we hope we can join us for our next sessions. And thank you very much, everyone, for today. Thank you.